So things are not getting better in the housing market, and in fact, they may get worse. Surprise, surprise. So welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Today is November the 13th. Randy Patrick here, putting the realism back in real estate. Hope you are all doing well. To get into it right now, this came out the other day. Actually, not the other day. It actually came out earlier today. Sorry about that. Articles. So I look at articles from all over the place to see what people's opinions are. So Peter Schiff, I'm sure a lot of you have heard Peter Schiff. He's on YouTube. He gets interviewed quite a bit. Obviously, I don't know if he's a formal economist, but I know he's quoted quite often in the financial sector, and he obviously pushes gold as alternative to putting your money in the bank. So he basically appeared on Real America with Dan Ball, talk about the employment data and the state of the real estate market. So of course, when people are talking about the real estate market, I want to check it out and see what's going on. That's the whole idea, right? Being aware of what's happening in the industry. So a little bit of an interview here. I'll just do some highlights, basically. The economy is not doing very well. We all know the situation that we're in. Should come to no surprise. Clearly, we see a lot of data being manipulated and data sort of being analyzed in various ways. According to Mr. Schiff, he said it's actually doomier and gloomier than the headlines suggest by pointing out with the jobs data. He said if you dig beneath the $1 million private sector jobs that were created, those were almost exclusively part-time jobs. They're low-paying jobs. They went to people who already have one or two jobs. The number of Americans working multiple jobs soared almost 400,000, I think, to another all-time record high. So yeah, that's the thing. So when you take a look at positive job numbers, high level, sounds great, but when you dig into the real statistics, you can see that it's not people who are getting high-paying new jobs. It's a whole different scene here. He pointed out that the economy is actually shedding manufacturing jobs, which is not good. Those are usually full-time, higher-paying jobs. So we lost 35,000 manufacturing jobs. They're productive jobs. They're good-paying jobs. Instead, we replaced them with more IRS agents. We hired 51,000 government employees to be added to the payroll. Anyway, they undermine economic growth. This leads to bigger deficit and more inflation. So the job market, not rosy like people are saying or what we'd be led to believe. I agree with that. And remember, how it affects this and how it all comes back to the real estate market is that when we have job loss or people who are trading full-time jobs for part-time jobs, what happens? Well, that means less income, reduction in income, and puts a strain on your household finances. At some point in time, how does that sort of catch up with everything? Inflation, gas, cost of goods, feeding your family, the whole bit, energy costs. I mean, at some point in time, you're going to have a hard time paying that rent or paying that mortgage. That's going to be your trickle-down effect. So that's what really is going to happen. And is already happening right now, which will affect the housing market as time goes on. He then asked about the current situation in the housing market, recalling the money that he personally lost in the crash, 2008. This guy who interviewed him pointed out the insane prices of home in San Diego, wondered how anybody could afford to buy a house given the combination of high prices and rising mortgage rates. Is there going to be another bubble pop when it comes to the housing market, he asked. Absolutely, that's what Peter responded with. The only way you can afford to buy something is that the price goes down. But the problem is when the price goes down, the banks are in a lot of trouble because that's their collateral for these loans. Now, Mr. Schiff's also saying that we have a bigger problem now we did in a bigger problem now than we did in 2008 because the banks are losing money on all their mortgages, not just subprime. So if you go back to the last housing crisis, what was the trigger that kind of set things off? It was the mortgage meltdown, which was referred to the subprime mortgage crisis. Okay, that sort of kicked things off. Back in 2008, it was only the defaulted mortgages that were a problem, which were quite a bit. Now, all of them are a problem because the banks are only earning 3%, 4% on these mortgages, but the cost of money is now 5.2%. So the banks lose money on every mortgage that's being paid. The entire banking system is completely insolvent, which I do agree with as well, too. So we just keep on, we keep on writing loans, which is great, but somehow, some way, the numbers don't make sense, and it's got to sort of crash at some point. So who knows what's going to happen? I've got some ideas. We're headed for much more housing disaster than I think has been anticipated. Right now, housing is being held together with, sticky tape as far as I'm concerned. A lot of things happening in the marketplace. We're just not seeing it now. Like the last housing crisis, housing was the first to fall. Then we had other issues that became the financial crisis in 2008. This time around, it seems like everything else is having their issues, and housing's kind of like that last sort of island of refuge that we have. Ultimately, in the end, it's going to fall apart. So that's kind of the situation and the housing world, according to Mr. Peter Schiff. All right, guys, if you appreciate the information that I provide on this channel, if you do me the great honor, hit that subscribe button. That'd be great for me. Thank you very much. If you are already a subscriber, could you please hit the subscribe button again, get that bell notification, reaffirm your subscription, because I lose subscribers on a daily basis. Don't ask me why. If the powers that be are keeping me down. All right. Anyway, appreciate that, guys. So funny enough, we don't talk too much about this, but I'm involved in it as well, too. He also pointed out that commercial real estate is an unmitigated disaster. It really is. We just had the bankruptcy of WeWork. It took a while, but that's going to put a lot of office space in the market. It's already depressed. It's oversupplied. Commercial real estate prices are being cut in half, and the banks have huge losses. So yeah, that is a major concern right now. And to the point where you actually have some of the hedge funds that are out there. They're literally turning the keys in on their offices and their hotels at some of these bigger developments, shopping malls, etc. People are just going, yeah, we're done. We'll take our lumps, but we don't want to deal with this anymore. So that's the situation that we're in. When this happens, I mean, normally you don't have two major real estate crises hitting at the same time. Looks like it will. So the commercial is already in crisis. There's about 2.5 to 2.7 trillion dollars of loans that are coming due over the next 3 to 4 years. And a lot of these companies like a WeWork and some of these larger hedge funds or hotel chains, they're basically saying, we're just going to shut it down. We're going to give the keys back. We're not going to pay anymore. Come after us. You know what I mean? Like, what can you do? So they see no value in continuing to pay and keep these properties going on as losses on their balance sheet. Simple as that. So this is one more thing that's going to add to the chaos that's going on in your industry. But the point is that we're not out of the woods, okay? You see some data here and there from Case-Shiller, et cetera, that shows, yeah, half the, top 20, Case-Shiller homes in the top 20 indexes, they're marginally increasing the year over year, but the other half are losing. So it's very metro specific. In the end, what catches up with people is pure personal economics, all right? The more losses, the more expensive things are. People just, they have to put gas in the car. They got to put food on the table. You got to pay your cell phone bill, okay? You have to do certain things to sort of keep your household and family working. Then the rent and mortgages will be last in the list because you do have some flexibility with that. You can go behind for a bit, but eventually people get too far behind. They can't catch up, and that's problematic. So in summary, you know what I do, you know what I talk about, you know what I'm involved in. I'm involved in a lot of stuff right now, okay? In summary, if you go down the path with me here on the distressed property, there's many, many opportunities, multiple niches, and no one is focusing on these niches. I'm dead serious about that. Will it be just like the 2008 crash and the opportunities that come with it? Possibly. It could be worse. But either way, if you're not looking for the opportunities, then it doesn't make sense for you. So what are you waiting for? All right. I always say don't miss out on this once-in-a-lifetime opportunity. If you haven't been involved in the market cycle previously and real estate, or if you have, don't miss out on this second chance at a once-in-a-lifetime opportunity. That's the kind of cool thing about what we're doing here in this market. There's always, if you're looking, there's always deals to be had. So speaking of which, I actually last week had a launch party for a new brokerage I'm operating here in the Tampa, Florida area. So I was the special guest speaker, your expert real estate broker. So it was well received. Really appreciate those who showed up. But having said that, it's all about follow-up now. So what am I looking for? I'll give you the list of what I'm looking for. I'm looking for investor buyers. What I mean by that is cash buyers who need single-family residential properties, SFRs. I got off the phone with someone earlier today. It was just an unsolicited call. They said, hey, we see you participate heavily in the Tampa Bay market here. We're a wholesale group. We have lots of properties we're trying to dispo to other investors for cash buyers. So I keep connecting with people who have inventory and they're looking to move some of these. And a quick look on their stuff, it wasn't too badly priced. So if you're looking for cash flow rentals, fix and flips, connect with me because I could have definitely some opportunities for you. I'm also looking for private funding partners on single-family residentials and some other projects. What I mean by that is buying at the auction, doing some cool things to control properties that are going to give us lots of maximum opportunity. So you don't have to be involved from a real estate perspective. You just have to want to lend money, and we do joint ventures, and we'll secure it by your company, your name on title, whatever. I don't care. Point is that I got lots of opportunity happening, more than I can handle, and I need to have funding partners to get some of the things going. We've got a lot of great ideas and sort of things that we're implementing for the distressed property market, and I think this is a great opportunity. Recruit real estate agents, all right? We operate as hybrids. We operate as investors and real estate agents. You can do both as long as you have the proper disclosures and make sure you don't pull the wool over people's eyes, especially homeowners, which we don't. We run ethically, morally, the whole bit. But the point, though, is that I need more real estate agents to support the stuff that we're doing. There are so many deals that are out there that aren't being touched that the more I have people in my system, the more I can direct those to go find some of these that we can all make some money. I'm looking for more joint venture partners, i.e. real estate investors. I'm looking for real estate investors who have access, who are coming across the distressed property market, so that are trying to do, would like to do short sales, would like to do probates, things like that, but either don't know how or they don't fit your buy box. Talk to me about that and we can see how we can work together. So a lot of investors bring me these distressed deals that I actually work for them. So that's kind of what I'm looking for. So please reach out and let's start talking. Now, obviously, you know, I do have other things that I get involved with, some of the training things. Well, this is really interesting. So I'm offering some great price points for the month of November here. I want to get people involved because now's the time. I've seen a big uptick in what's going on here. So this is what I'm involved with. Foreclosure auctions, bank-owned deals that are called real estate-owned REOs, short sales, short payoffs, taking the property subject to, homeowner association, condo association foreclosures, tax deed foreclosures, probate estate foreclosures, the zombie house stuff, all right, underinsured situations where they don't have enough money to pay for the damages and they want to sell, and what's called surplus or overage with respect to what's going on with auctions and the extra money that's entitled to the homeowners, okay, afterwards. So this is what I got going on. I'm involved in all those type of things now. And plus, well, there's a new thing that we're doing called novations, which is kind of like wholesaling, but a little more sophisticated and a little better for people. So for both sellers and for the investor involved. So a lot of things that we can do. Reach out to me. I'll be marketing that this week here. I want to put on a limited number of people to get going on these programs because there's so much to do in our area and other parts of the country. A lot of opportunity for me. I'd like to connect with lots of people so we can do lots of deals and we can participate pretty heavily and stuff like that. That's the scoop, guys. So that's what I'm doing. Reach out to me. I'll be doing more videos on these topics right now. But once again, it's the real estate. This is the time to get involved in the real estate market. Retail is tough, but there's deals that are out there. If you're willing to do a little bit of research, a little bit of legwork, there's a great opportunity to acquire, to invest, earn cash flow, to build wealth, to earn income, etc. So whether you're a real estate investor, whether you're a real estate agent, or just someone who wants to buy, you're an owner occupant, you want to buy a home to live in, but you're tired of these high prices, these high interest rates, the stuff that I teach and get involved with is sort of what you want to learn because it gives you the shortcut and gives you different ways of looking at things that maybe aren't apparent and that they're out there in the industry today. All right. So once again, everybody, I appreciate the views, the likes, and the comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe. And we look forward to speaking with you in another day or two, okay? Take care.